about 1.8% for the day. And the new DFX Coindesk DeFi index is at 597, angling for that $600 resistance level, up just about 15 basis points. Joining us now to discuss the crypto markets is Omer Ozden, CEO of Rocktree Capital, a New York-based merchant bank. Hello there, Omer. Thanks for joining us. So give us your quick take on the crypto markets outlook amid this ETF, but also amid China's crackdown. And you are also, viewers note, heavily involved in Asia.
Hi, Christine. Good morning. I think that it's great to see you on a green candle day with Bitcoin approaching the highs that we saw in May. I think this is a reaction, obviously, to the rumors about the ETFs being approved by the SEC, but also we had validation from other world leaders, including Vladimir Putin, talking about cryptocurrencies being accepted as potentially as currencies and so forth. And I think also there's a lot of enthusiasm in other areas, other markets as well. And I think that the FUD surrounding China is not as bad as it was initially thought to be back in June, July, and recently in September.
Can you talk to us a little bit more about what's happening in the Chinese market, given that you do a lot of business with Asia? Is trading still happening in China to the same degree? I know it's kind of a black box, but ostensibly the Chinese government is closing a lot of the loopholes for trading. OTC looks like Huobi OTC looks like it's going to basically shut down at the end of the year. What are you seeing actually in mainland China in terms of crypto trading?
Okay, so I think it's really important to put things in perspective. A lot of people were reporting that Chinese government is against Bitcoin mining back in June, July. And that's simply not the case. It was actually related to an NDRC policy that was issued in June 3rd, saying that the country had to conserve energy. And that was clear across, and it wasn't just related to Bitcoin. And we see that today in September, October. You'll see brownouts in various different industries. And of course, Bitcoin mining was one of those vertical industries that got impacted. In terms of crypto itself and trading with the exchanges, definitively things have changed. We do have specific regulations related to exchanges. In 2017, there was also similar types of policy. Some exchanges in 2017 in China shut down, like BTC China. It's no longer there, but Huobi OKX stayed. Binance went offshore, and you have some of the largest exchanges in the world from that time. Today, I think you're going to see the same thing, which is on the ground, exchanges are shifting towards moving more offshore. That's definitively happening, particularly moving to Singapore and Dubai. However, a lot of the clients that are being onboarded are offshore as well. And so the volumes continue. Another trend that we see, and that's with respect to centralized exchanges, another trend we're seeing is more move to DeFi. So one of full disclosure, a project that Rocktree invested into, dYdX, which is a decentralized derivatives platform, was doing about $10 million of volume last summer per day. Today, it's around 4 billion to 5 billion per day. And last week, it hit 10 billion, which is, in terms of volume per day increase, that's 1,000x in a little over 14 months. So the expansion of a lot of protocols decentralized into Asia is an important part of the development of how the users of exchanges are actually trading crypto. It's not just centralized, it's also decentralized.
So, Omer, looking ahead, should a Bitcoin ETF get clearance from the SEC? And again, we don't know. We won't know until next week if it is the case at all. What changes for the way you invest in companies and projects, et cetera? And what do you think happens, dYdX, as you mentioned before, what do you think happens on exchanges like dYdX? Will you expect any more volume, less volume? What do you think will happen there?
I think what you have to do is not skate to where the puck is, but you have to skate to where the puck is going. So the metrics I just listed clearly outline the direction the puck is going. And I think that with respect to ETFs, that's a great thing. That's a great entree for traditional investors into cryptocurrency market to get exposure to Bitcoin. But what we're seeing more so in the West than the East, but what we're seeing is actually a lot of institutional investors who are looking to move into blockchain and cryptocurrency, moving straight to DeFi. So they're typically the gateway has been Bitcoin, but that involves a considerable amount of speculation and so forth. However, DeFi are financial primitives that the financial institutions understand. So yes, Bitcoin ETFs will definitively help more institutional adoption into crypto. However, it's already happening through DeFi because the institutions understand the basic financial primitives that are now building on this DeFi infrastructure on various layer ones. And with respect to Asia itself, I think that a lot of the users want to retain custody. They don't want to trust centralized exchanges because there are political uncertainty, because there may be regulatory uncertainty, plus sometimes bad actors too. And so I think DeFi also satisfies that concern and demand by the users.
Omer, just listening to some of your talking points there, I mean, you said China has an aversion toward Bitcoin or cryptocurrencies in general because of the energy arguments. But another talking point we've been hearing is that they also want to make way for their digital yuan and make exclusive use of digital currencies based on their digital yuan. I wonder if there's any credence to that line of thinking. And also, if that is the case, is that why we're seeing such a huge rise in DeFi platforms like MCDEX, like dYdX and per protocol? Is it because that, they, as you mentioned, political uncertainty around these centralized exchanges, so they just want to get into DeFi?
I want to make something clear that the Chinese government is not against Bitcoin itself. It's when certain aspects of different industries hit the red lines. And in blockchain, I would argue that actually in some respects, China is the largest regulatory sandbox in the world. That's what's allowed 70% of the hash rate, prior to July 1, emerge in China. The largest exchanges emerge from Greater China. So in terms of what the government is definitely for blockchain, more so than any government globally, arguably.
But only their blockchain, as in their digital yuan, not others.
Well, I think that there's a real interesting wisdom amongst the Chinese government that they understand that nascent technology, you do have to let it grow organically as it gets larger. But I think that in terms of the digital e-CNY, this is not a competitor with Bitcoin. This is not a competitor with Ethereum. Perhaps USDT and certain stable coins, the use case itself could be seen as a competitor, but the e-CNY is centralized. The people who use the digital yuan, which is growing, it's approximately 22 million users so far, but it's grown to 9 cities across China. So it's growing rapidly, I would say. Those aren't the people who are using USDT. Those aren't the people who are degen on Ethereum and Solana and so forth. So there's not a competition there. And I think the Chinese government recognizes that, except for perhaps stablecoin and USDT. China.
Omer, we'd love to talk further on this, but we have to wrap it up there. But thank you so much for joining us. Appreciate your insights. That was Rocktree Capital CEO Omer Ozden. And that's it for our First Mover. Thanks for joining us, Emily Parker and Lawrence Lewitinn. You're watching Coindesk TV.